the MPC voted unanimously to increase the policy repo rate by 50 basis points. In extremely volatile and uncertain conditions, we just cannot give any forward guidance. The real GDP growth for 2022-23, that is for the current year, is retained at 7.2%.
The Reserve Bank of India has zeroed in on inflation as its enemy number one, jacking up the benchmark repo rate by half a percentage point to 4.9%. This is the second increase in less than 5 weeks and will translate to your loan EMIs increasing again in probably the next fortnight.
The war in Europe is lingering, and we are facing newer challenges each passing day, which is accentuating the existing supply chain disruptions. As a result, food, energy, and commodity prices remain elevated.
The agenda was clear in the first 30 seconds of the RBI governor's policy statement. Inflation is the millstone weighing the heaviest around the central bank's neck. To control the spiraling prices, the Monetary Policy Committee of RBI unanimously decided to hike repo rates by 50 basis points to 4.90%, making the money more expensive for those looking to borrow, effectively reducing the supply of cheap money in the market. However, RBI has been forced to concede that the present inflation is more determined. The central bank has raised its inflation estimate for 2022 to 2023 to 6.7% from the earlier 5.7%, saying that 3/4 of the increase was attributed to rise in food prices. He also warned that inflation will remain above RBI's upper target of 6% for at least the first 3 quarters of this financial year. The rate is expected to moderate to 5.8% in January to March 2023.
Inflationary pressures have become broad-based and remain largely driven by adverse supply shocks. There are growing signs of a higher pass-through of input costs to selling prices. The MPC noted that inflation is likely to remain above the upper tolerance band of 6% through the first 3 quarters of the current financial year, that is 22-23.
The RBI governor also warned of global challenges to the Indian economy, listing out negative spills from geopolitical tensions, elevated international commodity prices, rising input costs, tightening of global financial conditions, and a general slowdown in the world economy as big retardants. Shaktikant Das, however, remains confident of the Indian business panorama.
Our surveys suggest further improvement in consumer confidence and households' optimism for the outlook a year ahead. Business sentiment remains upbeat according to early results of our surveys.
The RBI has kept the GDP growth estimate for the current financial year unchanged at 7.2%. This growth rate forecast is, however, expected to fall each subsequent quarter, a clear indication that the economy is not anywhere out of the woods yet. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.